Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 13, Monday. We are starting the week after all the weekend with a lot of uncertainty regarding the bank sector, the financial sector, that if you didn't know, on Wednesday, the Silicon Valley Bank started the surprise when it said that needed to raise 2.25 billions to shore its balance sheet. Basically, a lot of bad investments on treasuries, on bonds, gave this bank a lot of exposure to high interest rates, and at some point it got destroyed. It started the meltdown, and customers withdrew a staggering 42 billion of deposits, and then the rescue came out this weekend when the Federal Reserve said and confirmed that they were going to intervene the bank and also its customers, and no damage to the taxpayers will be done. So this money will come from the investor funds fees and all the regulatory budget. So basically, this started on Wednesday. On Friday, it got super bad, and during the weekend, uncertainty until the Fed said we are going to support the economy, we are going to rescue everyone, so don't worry about that. But the Asteria, look at this chart, it got demolished. A lot of information regarding SVB root cause of the collapse. You can already see the details, but the results is that there's a lot of fear in the markets. Even though we are waiting for tomorrow's CPI data, and we were coming from more or less decent economic data, and also Fed saying that inflation is going down, maybe we are going to turn the corner. This was a big drop in the market sentiment, and not only for Silicon Valley Bank, but also for a lot of banks. If we check the financial sector, the XLF, you can see that everything started on Wednesday, and since then the financial sector is down till today. It was at some point today 10%. This was a very big drop. Bank of America feeling the pain. Wells Fargo feeling the pain. JP Morgan feeling the pain. Everyone got impacted due to this. And well, if you didn't check either, VIX is spiking up. But today was a tricky day because we started very bad on the day. Since the London Open at 3, we went lower and lower. And once it was confirmed that the Fed are going to support the economy during these times, and also at 9 p.m., Biden confirmed that no money from taxpayers will be taken. So I think markets are buying this kind of supporting economy message, and we are seeing a turnaround. Nasdaq 1.30, green on the day, even though choppy markets, and there's still a lot of red in certain markets. We are going to talk about yields also. Overall, financials are at least consolidating, and they are digesting all this information. Be careful, because this is a very dangerous time. Plenty of opportunities, but there's a lot of risk and uncertainty, and well, energy is also feeling the pain due to demand destruction. Crude oil was selling off. Right now it's, look at these bottoming tails. So we are going to see a lot of these ones. Fear, extreme fear, and then a lot of buying tips. We are going to see that on the Nasdaq and also on Apple. Apple strong 2.68. I mean, Apple and Microsoft are leading the way up on the Nasdaq. But let's talk about correlations. Dollar is feeling the pressure because no one is going to have cash in the bank now that the financial system is tumbling. Dollar is feeling the pain due to this, and the most important thing, look at this chart. This is the US 2-year yield. Look at this. This is unbelievable. I've never seen something like this before. This was February 20, and there's a lot of data back in 2008, but look at this. These are daily candles. This is insane. Yields, the 2-year yield topped at 5%, and since then, in 3 days, we are at minus 21% of pullback. The 10-year yield, the most important one, is also in 3 days, 15%. And if we check the interest rates futures for September and December, look at this. This is September. From 5.67 terminal rate that markets and bonds market were pricing in, we were mentioning that last week's videos, you can see the big drop. The expectations is now, right now, 4.4. Interest rates, terminal rate in September are 4.1 in December. So this is a game changer. The meltdown of Silicon Valley Bank and other banks that were also halted down today, be careful with that. This situation is affecting the terminal rates and the Fed's decision, and everyone is expecting Feds to not continuing hiking rates. This is one of the first things that we have to understand. And let's check the analyst expectations because this is super interesting. It's night and day compare with last week. This is for March. 475. This is the left one is 0%, no interest rate hike, and 65% is 25. So it's a completely different story. And if we check the probabilities, no one is pricing in more than 5%. And on September and December, we are pricing in 4. So we are, I mean, my opinion is not this one, but let's talk about data. A lot of analysts are expecting Fed to start cutting rates to support the financial system and the economy. This is not my opinion. I think Fed needs to continue hiking rates until economic data is showing that inflation is under control and is going down clearly. This situation with the banks, it comes in a very bad moment. It's the worst moment of all to start supporting the economy because we are fighting inflation. And if we are at the same time fighting inflation and supporting the economy, that's just, it's a nonsense. It doesn't make sense and it will not work. If we support the economy, inflation will not go down. So I hope for Fed to continue raising interest rates unless something is showing that inflation is going down. Let's focus about inflation. The economy, the banks, is just a big surprise, but Fed already said that they will be supporting the money and those customers that are affected. But they will not be supporting the economy by not raising interest rates. That is key to understand. I hope so. I hope Fed will continue their hawkish message. So let's go back to the charts real quick and finish the technical analysis for Nasdaq. I was expecting these kind of things once I saw this. So basically, this was one of the most important candles of the day. If you check this, you can see that there was really support at 11,700. And after that, after this spike, it was consolidating, chopping around, and the second leg up. And right now, 1.50, approaching again this white line that is the 200 SMA. 200 SMA, it's approaching. We are again at those levels. And I mean, this market is crazy volatile. There's plenty of opportunities, but also risk. Be careful and watch out. And if we check the 30-minute chart, we are approaching yesterday's close on the big spike at 12,000. So be careful, because today's move is super volatile, super strong on the support side, but we are approaching these levels, and right now we are quite in the green. So don't be greedy and start locking profits, because this move was quite nice already. Just don't be greedy and wait for more opportunities and for markets to digest and start seeing progress. If not, lock the day in and wait for tomorrow's CPI. Regarding CPI, well, I think it's clear that we are waiting for CPI tomorrow, 1 hour before the market open. We are hoping for a slightly decrease in core inflation rate and a big year-over-year decrease and month-over-month on the general inflation rate. That would be key. This is key. If inflation starts again showing even slightly decrease, this will push the sentiment even higher after the Fed is supporting this bank disaster. I think having a CPI and core inflation day tomorrow with cooling down, with less numbers, less data, will also push the markets up. And on Wednesday, we have PPI. But for now, after all this surprise during the weekend and today's weakness that got bought up on the bank sector, I think there's, if we check the SLF, we are starting to see higher highs. We are leaving back the pivot, and at least we are consolidating. I think it's a good moment to stop the day, take profits, and wait for tomorrow big number that CPI may push the markets even higher. And let's hope for that. I think if CPI comes hotter than expected, I really hope Fed continue hawkish and continue raising interest rates, because if not, we are going to enter in a nonsense of economy in which in one side you are supporting the banks and the financial sectors, and on the other hand you are trying to destroy the economy to fight inflation. That would be a completely nonsense. It will be super tricky to trade. As you can see, we are chopping around, and at least we are having some decent levels being supported. Look at this 4-hour chart, and on the 30-minute, sorry, on the 5-minute, this was quite key to see. Also on the 1-minute, this bottoming tail was really a message. Some people is buying this dip. Big money. So let's see how we end up today. Right now, holding 12,000 would be really nice, and after how we started, it would be a really an achievement. So I think that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Please support the channel, and I will continue spending my time trying to show you how the markets work and how you can really have an edge on these markets. As always, thank you for your time. Remember that the day trading is not over yet. We are starting to approach to noon, lunch hour, very dangerous hour. Don't be greedy today. This is a high risk day. Just take your money and run and wait for tomorrow's CPI. That is going to be huge. And remember that discipline and risk management are key for success. Stay safe, everyone.